welcome to Farm Here Daily, a field forward podcast. I'm your host, David Geiger. Today on Farm Here Daily, it was a low volume trading day on the last day of the year, and markets were under a bit of pressure. We speak with Don Roose of U.S Commodities about the state of commodities. Please be sure to like and follow the podcast as well as our social media at Field Forward Pod. We would love to have you join our community, keeping folks informed about what is affecting our farmers. This is Farm Here Daily. And joining me on Farm Here Daily, we're going to take a look at the markets with Don Roose, president of U.S Commodities. Don, we've made it to the end of the year. It is the final trading day for 2025. I hope you are having a happy New Year's, because we are going to chat about what's going on here in the marketplace. And first off, last time we spoke was at the start of December. We're now at the end of December, last day here. What are you seeing? What was the expectations for December, and how did that actually turn out?
Yeah, glad to be back with you, David, and Happy New Year, but to you and all your listeners. But I think when you look at it, I think what happened from the end of November, last time we talked, we were rallying kind of going into the Thanksgiving timeframe. We kind of, from October to November, we kind of rallied up. Then we stalled, and we're on a $1.40 rally. Then we broke down about $1.16 on soybeans here just recently, and then we've rallied back a little bit. But then to end the year, I think what we saw is a lot of evening up, and we saw the funds that are sitting, we think about 130, 40,000 long, evened up, sold out of some of their positions, pressed the market to the downside. Meantime, corn tried to hold in, funds sitting a little bit short there, so just the opposite. So corn went out more steady. But corn, basically from the end of October all the way till now, we haven't gone anywhere. We've been in about a 16-cent trading range. To end the year, we got within 3-4 cents of the bottom end of the range, and now we'll start over and looking into 26, David.
I'm noticing today specifically at the very last trading day for the close, we were down quite a bit in soybeans. And when I look at soybeans over the last few months, I remember it getting kind of close to that $11 area and not really ending there. Is that just a result of expectations of the trade deal with China that President Trump had mentioned versus the realities of what China actually followed through on at the end of the year?
Well, I think some of that is, but I think really what's happened is, the idea of tariffs coming at us. China was going to buy more soybeans on this agreement. It pushed us to the upside, but also it was as we signed that deal, we started going lower, because the buy the rumor, sell the fact type of thing, that, okay, here come the Chinese. But I think as we hit the end of the year, reality hit the market on soybeans. And that's the fact. We're about 2 weeks out from starting to get a little more aggressive on Brazil harvest, and a month out we'll be even more aggressive. So the Chinese buying from the U.S. is probably 100 million bushels left, and then we're going to go to work and switch almost solely to Brazil. Remember, they have a monster 6.6 billion bushel bean crop. Our crop was only 4.3 billion. So huge competition, just, really within weeks away from us, David. Oh, by the way, they're about 50 cents cheaper than we are even today. So that'll widen as the basis gets wider down there.
Speaking of South America, how much attention is being paid to weather over there during their planting, especially as we watch their planting progress?
Well, let's just watch that. I mean, in the north, it's basically over. They're starting to harvest, so weather's not going to be a big play, other than if it starts raining too much, but it's in their dry season. So, that's not going to be a problem. And it's a long country, just Brazil alone. It's like from Canada all the way down to the tip of Texas. So big, long window when you're talking about it. So going forward, what I'm really saying is, northern Brazil harvesting, southern Brazil, we're still in that stage of development. And then as you push further down into Argentina, they're just finishing planting corn now and done with soybeans. So big window. You're talking about weather. It's a La Nina year. Southern Brazil and Argentina are supposed to be warmer, drier. There's starting to be a little bit of a dry pattern in southern Brazil, or mildly in southern Brazil, but central and southern Argentina are definitely on the watch list. As we go home on Friday, they have a dry pattern in those dry areas in the 6 to 10 day forecast.
Thanks for the reminder on that. I was thinking more maturation, and I said planting, but I also it's easy to forget that that distance, from South Texas to northern Canada, where we'll have the stretch of grain belt, is pretty similar, if not longer, between northern Brazil and all the way down to Argentina. It's kind of wild to think about it in that way, especially since the polar opposites are happening where the further south you go, the colder it gets, versus the further north you go, the colder it gets.
Yeah, exactly. That's exactly right. So it's a upside down globe, if you will. So that is a thing to remember.
Don, let's take a one final note here when we look at the grain markets at the end of the year, especially when it comes to commodities. Something to always recall is the last 2 weeks are not always going to be good indicators of what's actually happening because there's much slower volume, much fewer traders, but there are still going to be some automatic trading, some electronic trading going on, as well as farmer selling. So, how do you balance that last couple of weeks versus the realities of who's actually there?
Well, I think you do a couple things, David. You look at where the funds are sitting, and to end the year, we did see balancing in a thinner volume market, and the soybeans, got pasted here towards the last couple days of the year, and the corn basically started to stabilize a little bit. But I think we watched that, but then I think we really look at the fundamentals going forward, and we just talked about those on soybeans, and I think the next big speed bump is going to be that January 12th report. The farmers definitely put his hat on that one watching it because last year, remember, that was a bullish report, took yield almost down 3 bushels on corn, shot us up to 521 and a half. But this year, looks like, it's going to be harder work for that to occur. A lot of grain in the world market. So it's going to take a bullish report there, then probably some dry weather in Brazil on their second corn crop. Remember, that's the one that you harvest after the beans come off, which they will start in, more the end of the month here. And then you plant the corn, then we'll see once what happens. That's about a 3.3 billion bushel export market there. So that's ahead of us. I did want to mention, David, one of the things going back towards the end of the year here, we started looking at the metals. And I mean, it's a wild trade in the silver. On Monday, we had the biggest trade range that we've ever had in history on silver. And the only reason I bring that up, in the late 70s, 80s, every day you would walk into the market, the dominant thing you would look at, if silver was up 20 cents, we'd call soybeans up 1 to 2 cents. If it was down, if silver was down 20 cents, we'd call it 1 to 2 lower. A huge influence because that was the time frame when we had inflation. All you were looking for is something that was more stable. So are we having the same type of thing? At the end of the week, we started to watch the silver, and I heard more people talk about it, but we'll see what happens next year.
So what you're telling me, Don, is that too many people over the holidays were watching Yukon Cornelius and going silver and gold. That's really what we should be watching for.
Well, I actually think we started watching it a bit. When the all-time high on silver in 80 was like $50. That was the hunt route to the downside. After that was it. But we went up to like $83 on future silver. So I mean, it's kind of that little bit of an inflationary, attitude. And does the bubble burst? And does that whole psychology float over into the grain market? I guess is where I'm going.
Meanwhile, it's interesting you bring that up because I think of at the very end of last year slash early last year, we were talking a lot about the dollar as well as the power of the dollar, and it was around that 96 spot, which was especially crazy because it was 106, I think, maybe a year and a half ago, some around that realm. And it's pretty solidly a 98 now. How's that playing into this space?
Well, you're right. I mean, the silver market's been going up, or the silver, I'm stuck on silver, I guess, but the dollar, it was up, like 112 at one time, when we really were flying low on interest rates, and interest rates started to be cut, and so then consequently the dollar started to lose some of its favor. So it's actually down about 4% for the year. So it's had a movement, but to answer your question squarely, the lower dollar does help the exports because it makes it more competitive in the world. So lower interest rates push the dollar down. The dollar being lower helps the export market.
I think a lot of us also have gone to the pump, and folks who are in the marketplace and follow the markets know that the gas price, crude price, is not necessarily an indicator of how the overall economy is going, but it is something that is very easy to notice from a consumer level. Is that affecting how folks deal and work within the farm community?
Well, most definitely. I mean, agriculture, we use an awful lot of fuel. We use a lot of propane. So the lower diesel fuel this last year, it is lower. Gas prices are lower, so that's a plus. But, when you really look at it from the agricultural standpoint, what we really need is clairvoyance on this 45Z program for biofuels. What kind of tax incentives are we going to have? What kind of tax credits are we going to get? Can we expand the aviation fuel? Can we expand the ethanol, moving up to 15 year-round percent in gas on ethanol? Can we go higher than that? So I guess what I'm saying that we really are leaning on the Trump administration to give us some one-sided direction, but even that direction we hope is very much biofuel friendly, which we're still waiting to find out if that's true. That's our growth area, David.
Don, let's take a last look for 2025 at the meat markets as well. Cattle seeing a little bit of strength near the end of the year, but as we know, it's been a very volatile couple of months. What's kind of the final thoughts as we end December and the year in the cattle market and a little bit into the hog market as well?
Well, 25 was a very volatile market on the cattle. Obviously, we went to the hit all-time highs, historical highs. We went over in the futures market over 250. Then we slumped down, down into the 197 area on some of those deferred cattle. So very volatile market. We end the year with the packer going out about $250 a head loss on his procurement. So that one doesn't go on forever. We're looking at 26, and we're going into a year where very little expansion. Numbers are going to stay tight. I don't think that's the issue. Is really going to be the demand factor. And I think it's going to be key here in 26. What we did is we broke, let's just take February cattle. We broke about $46. We rallied back $28 off those lows up around this 231, 232 area on February. That's about that typical retracement that some of these cycle people look at, a 61.8% retracement. It's going to be a jump ball. Does demand push us up to new highs, or is this very much like 14, 15, where we stall here and we just keep two steps down, one up? We're going to find out, David. And, you ask about the hogs, the hog market. We had a bearish hog and pig report, and really we didn't react to it negatively. One of the reasons is, although we're talking about the farrowing intents out in the future going up 1% to 2%, but we still have disease issues, and pork exports are strong. We're the largest pork exporter in the world. We're number one. So we're watching. The exports are strong. The domestic demand is strong. Pork in cold storage was down 3.5% the end of November, 1997 low. And of course, then beef in cold storage was down 3.4%, poultry down 3.6%. So good demand in the meat market. I think the economy is going to tell us what the demand is going forward, and does the consumer buy down on protein needs, David?
Don Roose is president of U.S. Commodities. Don, thank you so much for taking the time to wrap up the year. If folks were listening in, wanted to hear more about the markets and what you guys do over there at U.S. Commodities, how would be the best way for them to contact?
You bet. Can reach us at our 800 number, 1-800-247-4071, or certainly look us up on our on the web at uscommodities.com. A lot of information about what we do on there. So thank you, David, and I hope you and all your listeners have a great new year.
This is Farm Your Daily, and we will take a quick look at the final closing numbers for 2025. March corn saw a decrease of a quarter cent at 4.40 and a quarter. March soybeans 14 3/4 lower at 10.47 and a half. Soybean meal in March $2.90 a ton, in the red, $299.40. Soybean oil about a penny weaker at 48.56 a pound. Wheat in March falling 3 3/4 cents at 5.07. Hard red winter wheat 7 1/4 down at 5.14 3/4. In the livestock market close for Wednesday, the last day of the year, February live cattle up $1.12 on our way $231.60. Feeder cattle rose 75 cents in the March contract at $345.32, and February lean hogs ended the day down 35 cents at $85.10 a hundredweight. That is the Wednesday market close. This is Farm Here Daily, a Field Forward podcast. Thank you so much for listening. Again, in order to continue to produce this type of local content, we would love to have you join our community. So please follow the podcast as well as our social media channels at Field Forward Pod. You can also find me on social media at Geiger Reports. Again, I am your host, David Geiger, and I hope you have a very great end of 2025. Happy New Year, and I'll see you again next year.